What's up everyone, it's Karthik with MoneyVest. So in this video, we are going to be talking about SOFI as they are going to be reporting their earnings very soon. In about a week's time, they are going to be reporting for the fourth quarter fiscal year 2024. And they're going to be wrapping up the entire 2024 fiscal year with our earnings expectations also pegged at around 5 cents per share in earnings and over a $700 million in revenue for the quarter ending in December. I'll go over all of my expectations. I'll also go over my intrinsic value, my price targets. We'll go over exactly what we're expecting going into this earnings print, and of course, everything that can happen with SOFI stock after the earnings results. I've also got a lot of data to break down going back as far as 2021, the last 3 years worth of earnings, and how well the company's done in terms of beating or missing expectations on their previous earnings as well. So do me a favor, share this video with another SOFI trader or investor. It would really help us grow our channel, and I would really appreciate that. And also do subscribe to the channel if you haven't already. So share video and subscribe to the channel as well. So SOFI closing in at $16.50 on a Friday. It is a longer weekend, so Monday the markets are closed. But this right here is when the earnings are coming out. So Monday, January 27th. So not the upcoming Monday, but the Monday after that is when they are reporting their earnings for fourth quarter fiscal year 24. And the revenue expectations are $674 million right now, with EPS expected at just about 3 cents in earnings per share. And I'll tell you why I feel that those are very, very low numbers, because in the past, number one, SOFI has beaten expectations across the board on almost all of their earnings. So this right here is the data that I wanted to go back to as far as fourth quarter of 2021. And if you take a look at the earnings per share surprise, it is on average a 63% surprise on earnings per share. If we exclude for my expectations for fourth quarter 2024 and simply take into account the last several quarters, we're going back as far as 12 quarters, the average beat on EPS has still been 63.5% for earnings per share. If you take a look at revenue, so revenue has also beaten expectations by an average of about 3%. But if you take a look at the last 4 quarters, it's been just shy of 4% for the business. And shout out to Tevis on YouTube for also putting out a very detailed analysis on his expectations for where SOFI could be in terms of his revenue and earnings per share expectations. But revenue is expected to be among investors, analysts, and of course, everybody on Wall Street at $677 million, or 674 to be precise. $674.88 million is what they're expecting. And I think SOFI's own guidance has been somewhere around 677 to as much as 678. So if you come over to the guidance over here, you'll notice that they're expecting the adjusted net revenue for the entire year to be somewhere between $2.53 and $2.55 billion. So when you extrapolate that number, in other words, right here, and subtract the last 3 quarters, you're coming in at just a little bit over $677 million for the company. Financial services net revenue growth, they're expecting of more than 80% versus 2023 levels, and lending adjusted net revenue of at least 100% of 2023 levels, and tech platform net revenues to be growing at low to high teens versus 2023 levels. So these are for the full 2024 guidance that they've provided us, and adjusted EBITDA somewhere between $640 to $645 million, and GAAP diluted EPS of somewhere between 11 and 12 cents per share, which also has the probability of coming in at well over 14 to 15 cents per share on a GAAP basis for the company. On a non-GAAP, of course, much higher, but on a GAAP basis, they're expecting 11 to 12 cents, which of course could be much higher for the company. So very quickly, starting from the very top, members-wise, of course, the expectations now would be to get up to over 10 million members for SOFI, crossing over 10 million for the first time because they've been growing at anywhere from 30 to 40%. And if we simply apply, let's just say, a 40% growth rate for this particular quarter as well, so 9.3 million times 1.4, that number's way too optimistic. I mean, we'd be expecting over 13 million, but I do believe that I think a 20% is a lot more reasonable target for SOFI. So even a 20% target is going to put us at well over 11 million. But if I take it a little bit notched down and be more conservative, 10 to 11% quarter over quarter, and that's when we're expecting about a 10 million crossover for the company for in terms of the actual growth in members. So 10 million would be my target, that they're going to finally achieve 10 million members for SOFI as of the fourth quarter 2024. Coming over to products, this expectations would also be somewhere around 14 million products for the company, compared to fourth quarter of 2024 when we were at 11.1 million. And then again, you extrapolate 11.1 times, let's say, an average of about 1.3, in other words, that 30% growth, and we're looking at 14.5 million products for the company. Again, doing a little bit more conservative analysis, instead of growing at 30%, maybe going down to 25. Either way, 14 million should be the number that we get in terms of printing right over here. In terms of Galileo accounts, and that has been a little bit more slow. It's been more stable, as you can see, in 2023, and then really picked up towards the end of 2023, going into 2024. And so what you'll notice is that fourth quarter 23, we grew at 11%. And if we simply take into account another 10% growth for the company for Galileo accounts, we're looking at a growth of about 176, close to 180 million Galileo accounts. So again, my expectations are going to be somewhere over 170 and touching up to as much as 175. That's going to be a moderate 10 to 11 to 12% growth on a year-over-year basis for the company, which is still on par. In fact, even lower than what they've done over the last 4 quarters. Now, this right here is now also revenue breakdown and contribution mix, where I expect the company to actually shift finally, for the first time in the last 3 years, in terms of their revenue profile. So for the longest time, of course, their lending business was the main business where majority of their revenue and contribution margin was coming from. But financial services and technology platform has been picking up slowly and steadily, as what used to be a 24% contribution for the overall revenue has now extrapolated to over 49, almost half the business. And I feel that this right here, the fourth quarter 24, is going to finally be the quarter when the company flips in terms of its revenue contribution, and technology and financial services going to make a bigger and bigger piece of the overall pie, as opposed to the lending business altogether. So $689 million is what they did in the last quarter, Q3 of 2024. That was a 64% growth on a year-over-year basis. So again, stellar growth rates being reported by SOFI. But my expectations, of course, are well over 730 million, of which more than 50% coming from financial services and technology platform, and lending business also growing, albeit at a little bit of a slower pace, because of just the lack of financing activity, just given how high the interest rates have been. So I do expect this number to actually start flipping over, where we are actually seeing over 50% growth or revenue contribution coming from those two, financial services and the technology business, and the lending business taking a little bit of a backseat in terms of revenue contribution moving forward. Of course, things could change depending on what we witness from interest rate cuts from the Federal Reserve and what they telegraph moving forward in 2025. But for now, I do expect that business, that side of the business, taking a bit of a backseat, and technology and financial services really booming for SOFI, as they're getting a lot of members, and that entire flywheel is now fully kicked off with the number of members and the products that they have on their platform. So quarterly adjusted net revenue, 689 million was the last quarter, expecting over 740 million, and adjusted EBITDA 186 million. And the biggest reason why SOFI has been performing really well in 2024, and of course expected to do well in 2025, is because of this right here, is their path to profitability. And they're finally able to get to a net income of over $200 million as of the 3 quarters ending in 2024 on a trailing 12-month basis. So very, very strong number there. Adjusted EBITDA coming in at $650 million, and of course revenue at $2.4 billion. And again, if you just simply take into account this 2.46, and then you subtract it to the number that they've given us for the entire year, so 2461 minus 2550, we're looking at around 89 million. So just net revenue, we expect to deliver 2.53 to 2.55 billion dollars. Again, they're really, really underestimating on what they can actually do. They've always given us a softer guidance, and they've come out and beaten expectations versus their own guidance, right? So adjusted EBITDA 640, 645, GAAP diluted EPS 11 to 12 cents, which is also what I expect to be a lot higher, 14 to 15 cents for the entire year as they wrap up 2024. And the guidance for 2024 for the entire year, as you'll notice, on the low end, 2.53 billion, high 2.55 billion. And then, of course, keeping adjusted EBITDA 640, 645, and diluted EPS between 11 and 12 cents, GAAP net income between $204 and $206 million. So even if I take this lower then very conservative guidance of $200 million in net income for the business. If you come down a little bit, you'll notice that if I take 200 million in terms of that growth, that net income, that profit number, and grow them at 35% over the next 7 years, because if you take a look at where analysts have them growing at in terms of the bottom line, 2024 EPS of 13 cents on a GAAP basis, 2025 29 cents, and then extending it to 49 cents, 58, 81, $1 per share in earnings, and then $1.23, $1.45, $1.63, and that is over the next 9 years. That's a 37% CAGR, and this is simply based off of Wall Street's expectations, which has already been a little bit lower. It's been conservative because, as we know, that SoFi has done a really good job in beating expectations. And if I show you this, you'll notice that the percentage of times I've actually beaten expectations in the last 12 quarters is 100%. 100% of the times. There's only once that they actually met expectations. That was the second quarter 2023, where EPS came in exactly as what the analysts were expecting. And then revenue, they've also beaten expectations 11 quarters in a row. And the last time they missed expectations by a small margin, 1.7%, was in the fourth quarter of 2021. That was by 1.7%. So in the last 11 quarters, revenue, they've beaten 100% of the times. 11 straight quarters of beat on revenue. Earnings per share, they haven't missed once, and only once they came in line with expectations. So the probability for a beat on revenue and beat on EPS is very, very high. And so again, 37% is what analysts are forecasting for the next 9 years worth of earnings growth, which is already a little bit more conservative, I feel. SoFi could easily surpass 37%. But even if you go with a 30% growth rate, 35% growth rate, I just want to show you guys that even if you go with a somewhat conservative growth rate for SoFi for the next 7 years, so $200 million net income, 7 years, 35% growth rate, and giving them a 32 times PE multiple, because right now they're certainly trading at a very high PE based on a trailing 12-month basis, and that's expected to come down to 57, and then 33, and then 20, 28, and 15, 13, 11, and 10 as earnings per share grow. Given the current market price, you'll notice that it averages out to around 35. 35 is the average for the next 9 years in terms of that forward price earnings multiple. So if I go with 32 with a slightly lower multiple and a 12% discount rate, 10% margin of safety, a little bit of share dilution there, I get a fair value of about $17. $17 right now, the price is rating at $16.50, and this right here is the sensitivity grid, where even at a 32 times P multiple, 35% growth rate, $17 ends up being the intrinsic value. And where SoFi is trading right now, $16.50, you can most likely come down to like here, $16 or maybe $16.35, 34 times P multiple with a 33% growth rate. In my opinion, it's easily achievable for SoFi over the next 5 to 7 years, as they are really literally just getting started, growing their members, growing their products, growing their revenue, growing their profitability and cash flow in order to reinvest it back into the business and really just capitalize on this growth in fintech and really become one of the larger institutions moving forward. So of course, their goal with Anthony Noto also saying that we want to be in the top 10 of financial institutions in the world, and that would mean multiple billions of revenue and multiple billions of profitability and market cap as well. So definitely a lot of potential, in my personal opinion. Given the conservative estimates, it continues to be a stock that I don't mind accumulating even at these levels. I did pick up over 300 shares. I picked up almost 100 shares at $13.75 and then picked up another 300 shares at $16.40s. And I don't mind picking up more shares because I do believe that the stock has a ton of potential over the long term as it continues to capitalize on this momentum. Now, in terms of the price movement on the stock, like what's going to happen after the earnings, this right here has been the price move over the last 12 quarters for the company. Last quarter, it actually dropped over 6.4%. The quarter before that, it was barely up. And the quarter before that, it was down 10.5%. And then the quarter before that, it was up 20%. So the percentage of times it's actually moved up is 66%. So yes, the odds are very much in favor of the bulls. There is a higher probability for us to see an upper move than a down move. And then the median move has been 2.3. The average move has been 4.5%. But then if you take into account the median and the average times when it's only been up, so in other words, 66% of the times that it's actually gone up, it has gone up by a median of almost 9% and an average of 11%. And the 34% of the times that it's actually gone down, it's gone down by an average of 9.4 to 9.3%. So we really have a range between -9 to +9, I would say, for SoFi. So if you come over to the technical analysis now, -9 is going to put us roughly around $15, and a +9 is going to put us at around $18. So there's a range, I would say, between $15 and $18 for SoFi post earnings, just given the historical analysis, given the data that we've just looked at. So I would put down a very, very important target right about here. It's going to be at $15. That's a level on the support side, and where it could really just drop if they don't get a beat on earnings, beat on revenue, if they don't upgrade their guidance moving forward, and of course miss on some expectations. So that's going to be the target to the downside, and this right here is going to be the target to the upside, where SoFi could be trading at post earnings. So that right there, $18 to $15 at $3 range is +9, -9 for SoFi. It's kind of hard to tell exactly where SoFi is going to be moving because nobody really knows, but my inclination and my gut feeling, given that I do expect beats on both revenue, EPS, and an upgrade to the guidance of 2025 and beyond, I do believe SoFi finally achieving profitability, finally getting that institutional mainstream coverage, has the potential to break to the upside at least beyond $17, to test highs of $18 moving forward. So that's going to be your entire analysis. Hope you all enjoyed it. Make sure that you drop a like and subscribe to the channel. In the meantime, of course, we're starting to, break to the upside. Next week's going to be very crucial for SoFi, and support level is going to stay put right here, $15 to as much as $13.70s, at which point I wouldn't mind, adding and accumulating more shares in and around those levels. So make sure that you drop a like, subscribe to the channel. As always, happy investing. Share this video with other SoFi traders and investors. So always happy investing. I'll see you all in the next video.